The information contained on the Crypto Sports Collector website and social media is for general information and educational purposes only. It is not intended as a substitute for legal, commercial, and/or financial advice from a licensed professional. The business of online investing is a complicated matter that requires serious financial due diligence for each investment to be successful. You are strongly advised to seek the services of qualified, competent professionals prior to engaging in any investment that may impact your finances.
Crypto.
So one question I get a lot is regarding alternative assets and what are alternative assets. And usually what I tell folks that ask me about alternative assets is you need to first understand what traditional assets are, because they're in direct contrast to alternative assets. So let me define traditional assets first, just as a baseline. Traditional assets are, even if you're not investing, are things that most people have heard of. They're really cash, just cold hard cash, equity, or another word for them are, stocks, shares of companies, as represented by stocks or mutual funds or exchange traded funds like ETFs, and fixed income, things like government bonds, for example. So really kind of traditional investing is kind of in these three kind of categories: cash, equity or stocks, and fixed income bonds. So compare that to alternative assets, which are just additional asset classes that can include really anything else that doesn't fall into cash, stocks, or bonds. So one alternative asset is real estate, for example. Other examples include private equity or hedge funds or commodities like gold, silver, copper, corn, oil. And those are kind of what historically have been seen as alternative assets, and what I would say, and we'll get into this more a little bit later, and one of the reasons why you might consider alternative assets is that these alternative assets tend to have a lower correlation than traditional asset classes. That's one. And what I mean by that is they will move counter to traditional assets. So if the stock market's up, then these alternative assets might move, in the opposite direction. So it's risk diversification. And that actually brings me to my second point about alternative assets, which is it just provides more diversification within your investment portfolio, for example. And lastly, these alternative assets tend to have higher returns than stocks or bonds. Again, any investment can return, varying percentages depending on the investment itself, but historically these alternative assets have higher returns but also higher risk than traditional assets. And these alternative asset classes typically tend to be a smaller part of an investor's portfolio, somewhere between 10 or 15% of a portfolio or less. That's kind of traditional wisdom. Everyone's going to have a different risk tolerance and at what level you're comfortable with putting money into these assets. But typically 10 to 15% is kind of a rule of thumb, or something less than that. One thing I would say about these alternative asset classes is kind of the downside is that they're harder to value. They tend to be also more illiquid. You kind of have to keep your money in them for years. There tend to be lower regulation, and I think I mentioned this earlier, is they tend to be higher risk. I would say also that some of these alternative assets tend to be harder for the average retail investor to get into. And that's actually for good reason, right? If you think about private equity and hedge funds, these types of vehicles are only open to very, very wealthy people or very sophisticated investors. And the typical retail investor, like those in our community, are not necessarily, don't have easy access to these things. Which actually brings me to my next point about alternative assets, is that in the most recent years, people have become more and more interested in alternative assets. Again, alternative assets is such a broad kind of umbrella term, but people have become more interested in alternative assets because either people are getting bored or have become, they feel like that the stock market or traditional investments doesn't work for them. Yeah, or they distrust it. I guess that's a better way to say it. There's a distrust that has come with kind of traditional assets like the stock market. I mean, if you go back to kind of the meme stocks like GameStop, when there was the whole trying to build GameStop up and then trying to you know, capitalize on that and kind of rallying kind of retail investors to kind of screw over kind of the big institutional investors that were trying to dump GameStop stock, right? It's this idea that there's a healthy distrust for the way that these traditional assets have been controlled by large institutional investors. And so there's just a distrust that has come about with traditional investing. And now with the proliferation of technology and the proliferation of the blockchain, these things have now enabled a new level of access to alternative investments and new places to put your money that were not even around 5, 6, 7 years ago. And I think that's very kind of interesting and opens up this idea of alternative investments wide open. Cryptocurrency is a really big example of this, because I would argue that a lot of people that weren't even in traditional assets probably poured money into crypto simply because it's something that they heard from their friend or in the headlines. And so it's just a very interesting dynamic to see this occurring. So this idea of alternative assets is just kind of wide open now with technology and the blockchain. And let me give you some numbers. Typical returns in traditional and alternative assets. And then also I'll give examples of some of these companies that I think are very up and coming and exciting and have come about that have really opened up these doors to the typical retail investor opportunities to invest their money. For typical returns in kind of traditional assets and some of these alternative assets, let's go through the returns, right? So the stock market, typically somewhere between 8 and 11% over the decades. Real estate, you can expect somewhere between 11 and 13%-ish. Gold, 6 to 7%. Fine art, this one varies a lot, somewhere between 6% and upwards of 15%. Private equity, somewhere between 10 and 12%. Again, this is reserved for a very kind of niche investor. Venture capital, again, very niche investor, but some funds can return upwards of 25%. So venture capital, you'll hear a lot about them, especially in Silicon Valley, having enormous returns. On average, they probably fail just as much as they succeed, but typically about 25%. And it's important to mention kind of these returns so you can start to compare and contrast. Why would you invest in traditional assets versus alternative assets, and what are the typical returns? This is important for us as investors, is just understanding context for the industry and the type of investment vehicle that you're looking at. Now, some examples of platforms that I invest in myself or have taken an interest to and just seen grow immensely over the past couple of years. Picasso is a platform that allows you fractional ownership in real estate. And that's very interesting, this idea of fractional ownership, because typically most people can't afford a second home, for example. They want to get into real estate, but they can't invest in it because it's very capital intensive. It requires a lot of money. And outside of your own house, you may not have enough money to invest in a second house. Picasso basically says, hey, you can have, here's a second home. We're going to basically slice up the ownership of that second home, and you pay 1/8 of the cost of that house, and you basically own 1/8 of that house. And so if that house appreciates in value, you will get a slice of your share of that house in return. So it's a very cool idea to break down what is historically a very big barrier to entry in real estate, kind of breaking it, which is high cost of capital and breaking it down and making it more affordable for the retail investor to invest in real estate. So that's a very cool concept. Another one that I've seen is Masterworks. This is fractional ownership in fine art. Same kind of idea with Picasso. Fine art is something that typically was an alternative asset that was reserved for the uber rich, but Masterworks has come along and made this much more affordable for the non-uber rich and people that are interested in getting into investing in fine art, but had no means to do it other than going to an auction house and literally bidding on a Monet, right? Most people, the vast majority of people in society cannot afford that. And so Masterworks has kind of breaking that down into using this concept of fractional ownership to own these very famous pieces of fine art. Another one that I'm personally invested in, another platform is republic.io. And this uses the concept of crowdfunding, and it's basically crowdfunding and angel investing in startups. And so you can own shares, early shares in these startups, and they're vetted by republic.io. You get to hear kind of their pitch on what their product is and their leadership team. But you as an investor can put as little as $100 into a startup. And these are the kind, and if that startup eventually IPOs or gets bought out or whatever they call a liquidation event, when some event happens and they transform their shares or those shares get valued at something higher, you will reap the benefits of that. And so, and then the last one I will mention is Rares. Rares is a platform that allows you to invest in rare sneakers. The fractional ownership concept applies here too. You can buy really rare, you could buy shares of a really rare Jordan, and you will own a share of that sneaker. And so when it resells at some point in the future, presumably a few years into the future, you will reap a gain consonant with what your level of share was, right? And so these are just examples of companies that are really kind of spearheading this idea of things that are on the blockchain or using technology, this idea of fractional ownership, and just kind of pushing the envelope of what is possible in terms of where you can invest your money. And so I think the idea of alternative assets is so vast, but it has become, the barriers for entry for the typical retailer investor has become lower and lower as technology has progressed, as blockchain has become kind of more mainstream, and these companies are offering you new ways to become a more sophisticated investor as well, right? And you're never guaranteed a return in any of this stuff. No investment really fully guarantees a return. So it's always important, as we always say here at Crypto Sports Collector, to be very disciplined and have a strategy in doing these things. But I think first and foremost, for a lot of our audience, I don't think they even kind of realize what is available to them in terms of investment vehicles.